Borrow rates remaining extremely high on GME. XRT going off reg show. A bunch going on. How is this going to impact the June cycle? And what is the broader market as a whole looking like?
So Josh, first thing I should say, we both got it wrong for this week. I was expecting GME to slide back down. I suspect you were doing the same.
Justin, I would take the contrary bet, and I distinctly said, because me and Justin both have bears, it was a 100% certainty that we were going to go up. So guys, if you continue to fade both of us, not only do you have a 100% chance of success, and that is guaranteed accuracy.
What I've been doing today and yesterday and most days is I like to hang out on Pi-Fi stream. So of course, always, if you're not already subscribed and paying attention, at least for the end of the day wrap-ups, definitely do that. What I thought was particularly interesting was Pi-Fi made the comment that what we saw this past week is we saw longs take control of the option chain. So if we go with the thesis that the option chain, or I guess the delta pressure from the option chain is a large, maybe the largest driver of price action. If you have longs in control of the option chain, that means the option market makers keep putting pressure on the stock. Buy pressure, sending the price up, which causes people to buy more options, and the options already bought. They become closer to being more in the money, which means that the option market maker has to do more hedging, so you have a positive feedback loop. This is the gamma ramp. If you've heard, the long run through about, A, B, C, D, or whatever, leading to MOAS, this is part of it. It's also very important to note too, and this is my poor understanding of it, but I'll do my best. You want there to be like jumping milestones as the squeeze takes off. So in other words, if everyone, let's say, like FOMOs into, let's say, calls at 1:30 or whatever, right, with GME closing at just shy of 134 today on Friday, what that means is that there'll be tremendous pressure for the option market maker to buy enough of the underlying to get GME to 134, but it's kind of like fizzle out because you kind of like blow all the fuel for the rocket from the early get-go. But if you also have, let's say, a large clump at 135, a large clump at 140, 150, etc., then the thing is that each time you get close enough, or the market maker gets close enough where they have to start worrying about the delta impact of this, they have to go and buy shares. The act of them buying shares sends the price up, which might trigger more people to buy options, or at least FOMO into the stock, which guess what? Sends the price up, which suddenly means, okay, great, you hit 135, now you're hitting 140, now you're hitting 150, etc. Again, this is something probably similar, although probably not exactly the same thing of what happened in January of last year. Or at least that was the pump was primed. But here's the takeaway, and this is why I kind of remain bearish for the short terms, let's say for the next 2 weeks or so, at least until the 17th. Just as you can have the gamma ramp, which is good, you also have the gamma slide. And all this while, this past week, Pi-Fi notes that you have had people, I don't want to name any names, who have been, greedily loading up on shorts. So this suggests that the smart money is expecting it to go back down. And just like you have the gamma ramp, pulling the price up, well, puts will do the same thing, because when puts go in the money, the market maker, that is the option market maker, will go through and sell shares naked short in order to maintain, their neutral position. And that sends the stock price down, which means that you might have more puts coming into the money, which means that more shares have to be sold, et cetera, et cetera. So essentially, retail right now seems to be using, or has used, the option market maker, probably amongst other things, to help raise the price of the stock. But at the same time, the villains in our particular story, right, that's not fair. The shorts. The shorts who want the price to go down, they have been buying puts on a discount, and if they really want to launch an attack, there's that. Lastly, Josh, we also want to comment that I think yesterday, I didn't catch it then, XRT went off of rate show yesterday. It was caught today, this morning when I first saw it, but that's an interesting thing because it also suggests one of the most liquid sources for synthetic shares is now back on the menu. Now, how long it stays on the menu, what they're going to do with it, how this interacts with the quad witching on the 17th of June, that's kind of up in the air. But nonetheless, this problem still, or not problem, this vector still exists.
Another thing that's going to put some downward pressure on GME next week is I am actually relatively extremely bearish on the market. Again, I did kind of say that we were going to go through a bear trap rally, and I think that we pretty much ended that. I did pick up puts again on the QQQ about a day or two ago. And if the market in general continues to go down, I expect GME to do with it. Today was actually a very surprising price movement. Yeah. GME almost flat on the day with the NASDAQ down like 2.5%. That is very good. That's almost having a negative beta because we were having an extreme positive beta, which means when the market goes up, GME would go up much more. When the market would go down, GME would go down much more. What we'd like to see is this negative beta where they are opposite moving, because that would elude that we could be starting to see something, especially if the stock market's crashing and then GME starts to skyrocket with it. That would be the best case scenario, but I do not expect anything like that until one of these cycles really come into fruition. How do I plan on loading up on options going into this June GME cycle? I do think the price is going to get ran down. If it doesn't, we'll talk about that just in a second. But let's say the price does get ran down, because it seems like all indicators are suggesting that it will. Then these options are going to get a lot more favorable. I will slowly start picking up positions, probably going in many different time horizons. We will talk more about this on our Sunday live stream. But from a very 30-foot, 1,000-foot level, I'm basically going to create like a gamma ramp type of situation, probably going pretty far out of the money. We will actually show how the option gain calculator looks, because when you are dealing with these far out of the money calls, when implied volatility goes up a lot, the value of these things, when I tell you they shoot up, it is astronomical gains, and that's really where you make all the profit from the IV, implied volatility of the stock going up. And GME has one of the highest IVs of any stock, and I would say human history, with such relative strength, going with massive swing pendulum, making it such a profitability, especially for these cycles.
Absolutely, yeah. And the one caveat to note with this is that, like, I have a huge IV play. In fact, the way I manage my upside exposure for MOS is ultimately with a very large volatility play. But like these things, like, you have got to stay on top of these calls, because if you really want to get and ping the volatility smile, like, I suspect there's money to be made, but it is not very forgiving if you make any mistakes. Versus, let's say, buying maybe a more boring tried and true at the money call, or honestly just simply owning shares. Again, I want to be perfectly clear: options are not for everyone. There's no shame in that.
I'm not going to cater to the non-optioners for now, because that's kind of what we do and what we're talking about. Because like my only goal is to profit from this. I couldn't care less if MOS ever happens, because now we can read these cycles with extreme accuracy. And if you can predict a stock movement, there is extreme valuableness to that. Yeah. And what I think is very interesting, and I don't see really anyone else talking about, is what will be the institutional interest if these cycles continue. Let's say we see another June cycle, and then we see a cycle a few months after that. There will 100% be hedge funds trying to arbitrage this, because that's what hedge funds do. They are looking for arbitrage situations exactly like this. And if you have this at the palm of your fingers already trying to understand it, then you can be in a very favorable position to profit massively. Of course, MOS on top of that would be absolutely fantastic. But with the data that we have now, we cannot speculate if MOS is going to happen. We can only speculate what we do think and have data to support that will happen.
Yep. And I should also add in closing too, there's probably ways that you can capitalize on the more regular and appears to be so far reoccurring volatility cycles while still being well positioned to capture MOS. So you can kind of have your cake and eat it too. But of course, take the time to do the education to learn and understand what you're getting into.
This is what we're expecting for GME. Borrow rates are remaining extremely high, which I do think is extremely interesting, especially going into this next cycle. Maintaining this, if we maintain it over the next few weeks, this will drive extreme pressure, especially during the cycle when they have to go into the market and actually buy flat out.
Yeah. The other thing too is that with XRT coming off the threshold list, you wonder if the bar rates are going to remain the same, because if they can go to XRT, then they could return the shares back to that. So anyways, I'm very curious to see what's going to happen with bar rates. My guess is with XRT off of rate show, bar rates will go down. But that's, again, me shooting from the hip.
Go down to where, though? I still think they would sustain a much higher low from where we've seen in pretty much any other cycle in a very, very long time.
Okay, so back up. Let me say this. I suspect borrow rates from where their high level, let's say their high water mark is relatively today over the past 6 months, they'll probably go down, I'll say by 50%, because I don't know the exact percentage, I'll just guess the middle, but like 50% on or before, let's say, the 17th of June.
Let's talk about the markets as a whole now. I'm actually very, very bearish going into the next 2 weeks. First, let's talk about economic news. There's going to be a ton of economic numbers coming out this next week, which I suspect all of them will be horrible. Then QT starts June 16th. Very interesting, going into the quad witching 17th. I do think that we could see a extreme flash crash situation going out past this OPEX, because the way that dealers will be hedged, I do think we will get another gamma flip situation where we would put some extreme downward pressure on the market. Why is that important? Because we've talked a lot regarding GME, that if we see a liquidity event, that will tighten up the shorts position and could cause an extreme squeeze going into an already very favorable time. I actually am way too bullish on a MOS style event. I don't think, I don't have the data to support that there will be anything to happen. Therefore, I'm not predicting anything like that happening. But I do think this cycle has an extreme chance of being something very big. And I want to profit as much as humanly possible from it. So I have picked up SPY puts. I picked up a few GME puts yesterday, or I actually picked one up today as well. Going into next week, I do plan on closing them next week and the week after, no matter what. In the money, out of the money, I don't really care. I then plan on flipping those shorts and going extreme long, probably buying my largest sized GME position, or any position that I've had in any stock history. And what I plan on doing then is playing this cycle with as extreme leverage as possible, because my only goal is to make money from it. If it fails, I think it's a calculated risk.